Welcome back to the channel where we talk about the latest news and biggest events shaping the world we live in. Today we're taking a closer look at America's second largest bank failure and the key takeaways we can learn from this historic event. What caused a major bank to fail, and what lessons can we learn from it? How will it impact the financial industry, and what does it mean for everyday consumers like you and me? In this video, we will be exploring the answers to these questions and more as we dive into the aftermath of one of the biggest bank failures in world history. So sit back, grab some snacks, and let's jump into the wild world of finance and banking. The second largest financial bankruptcy in U.S. history was brought on by the 48-hour collapse of the New York CNN Silicon Valley Bank. After failing to properly reimburse customers who had withdrawn their accounts, SVB, one of the top 20 commercial banks in the States, is now under the careful supervision of the U.S. Federal Deposit Insurance Corporation. The bank's failure could potentially have a big impact on the startup and IT sectors, and experts have even expressed wider concerns. Here is everything we know so far. Silicon Valley Bank was established in 1983. It provides funding for almost half of America's venture-capitalized technology and healthcare businesses, which greatly suffered from rising interest rates and a lack of venture capital. SVB was ranked among the top 20 American commercial banks, according to the FDIC, with over $209 billion in total assets at the end of 2022, despite being relatively obscure outside of Silicon Valley. On March 8th, SVB claimed it had sold a number of instruments at a loss and would be selling $2.25 billion in new stock in order to strengthen its balance sheet. This announcement set the wheels of doubt in motion. On Friday, March 10th, California regulators closed the tech lender. When the FDIC assumes the role of receiver, the bank's assets are often liquidated so they can pay back their clients, including depositors and creditors. All insured depositors should have complete access to their protected deposits by Monday morning, according to the FDIC, an independent federal body that insures bank deposits and regulates these kind of financial institutions. It stated that an advanced dividend will be paid to uninsured depositors during the next week. On Friday morning, the FDIC officially took control. Normally, they would have waited until the markets had closed. CEO of Better Markets, Dennis M. Keller, made a statement saying SVB's condition was deteriorating so quickly it could not have lasted 5 hours. That's because a large majority of the depositors started withdrawing their money all at once. With so many people taking their money out at the same time, the SVB did not have the funds to pay them all back readily available, rendering the SVB insolvent and making a classic bank run-induced same-day collapse likely. Since 2022, the central bank has aggressively moved to increase rates in an effort to stop runaway inflation. It increased the cost of borrowing for both businesses and individuals in an effort to make the economy run more smoothly. Banks stocked up on lengthy, apparently low-risk government bonds as interest rates dropped close to their historic lows. But as the rates increased again, the value of these assets decreased, and unrealized losses were quickly taken on. Technology companies were severely restricted by the high borrowing rates, which also reduced the value of technology equities, making it challenging to raise money. Customers of SVB started taking money out in response to these rising interest rates and the loss of IPOs and an overall funding shortage. The value of its government bonds and other securities the SVB needs to pay depositors has decreased as well, thanks to the rising interest rates, according to Mark Zandi, the chief economist at Moody's. All of this led to a run on their deposits, which compelled the FDIC to take control of the SVB. Now, before we continue, what was your first reaction when you heard about the banking collapse? Let us know in the comments down below, and make sure to subscribe to You So Crazy if you're enjoying the video so far. Now, let's get back to the action. Bill Ackman, a multi-billionaire hedge fund manager, compared SVB on Thursday to Bear Stearns, the first lender to fail at the start of the world financial crisis less than 20 years ago from 2007 to 2008. The next bank with the lowest capital will then begin to fail, and the dominoes will keep falling after that, according to Ackman, who posted about the danger of default and deposit losses on Twitter. But according to most analysts, SVB's collapse thankfully seems to be company-specific for the time being. The SVB will have to face the consequences as banks and lenders with specific clientele, according to Jonas Golterman, Capital Economics Deputy Chief Economist for Markets. SVB is having problems because of its exposure to particular businesses. He said that many other institutions are simply better diversified due to the considerable regulatory changes made after the 2008 financial crisis. Regular customers won't be impacted much, yet the division serves as a helpful reminder to keep track of where your money is being held. You should avoid keeping it all in one location. According to Bankrate analyst Matthew Goldberg, the first bank failure since 2020 is a wake-up call for individuals to constantly make sure their money is with an FDIC-insured bank, is within FDIC limits, and is consistent with FDIC standards. According to Catherine Thorbeck, a writer for CNN Business, SVB is a leading lender to many in the startup community, whose owners are currently busy producing their own money, paying employees, and covering operating expenses. Now that the bank is broke, I just want to know what happens next, the founder of health food seller Farmbox RX, Ashley Turner, told CNN in a short email. She asked, "Will I get my complete 8-digit number returned even though the FDIC protects $250,000? Others have been more creative in the face of this crisis. On Friday, Camp, a retailer of children's toys, clothes, and experiences, sent a message to its customers and posted ads online. Unfortunately, the majority of the monetary assets of our business were held by a bank that recently failed. You have undoubtedly heard of it. Customers were advised to use the promo code BANKRUN to save 40% on all purchases instead of paying full price, which they would have appreciated." Moves like this were seen more favorably in the eyes of the public, who only want transparency in these difficult times. Leaders like SVB are in a tough spot. After being severely damaged by the instability around digital assets, cryptocurrency-focused lender Silvergate said it will stop operations and liquidate the bank. Silvergate said in a statement on Wednesday that it believed an orderly shutdown of the bank's operations and voluntary liquidation of the bank was the right course of action in view of recent industry developments. Still, the chances of a wider spread are currently low, as far as we know. Jens Hagendorf, a finance professor at King's College London, said, "Generally, the financial sector is in good shape and able to withstand severe shocks. I believe SVB is unique in that their depositor base is erratic." On Friday, the Dow dropped 345 points, or 1.1%, experiencing its lowest week since June. The Nasdaq Composite went down about 1.8%, while the S&P 500 fell 1.5%. The VIX, Wall Street's fear gauge and volatility index, increased 15% on Friday afternoon as investors tried not to get dragged into a banking sector pandemic, according to the market team. To summarize what we've said so far, Silicon Valley Bank, SVB, one of the top 20 commercial banks in the United States and a major lender to the technology and healthcare sectors, collapsed after a sharp decline in its condition. The bank was not able to reimburse customers who had withdrawn their account totals, leading to a bank run, rendering the institution insolvent since they couldn't pay out customers. The collapse of SVB, with $209 billion in assets, is the second largest financial institution bankruptcy in U.S. history, coming after Washington Mutual in 2008. The failure is thought to be company-specific. This means it likely won't spread to other areas of interest, but it may impact the startup and IT sectors further down the road. The FDIC, which insures bank deposits and regulates financial institutions, has taken over, and thanks to them, will have complete access to their protected deposits. But uninsured depositors may not be fully compensated. The collapse of SVB serves as a reminder to keep track of where you're keeping your money. To prevent events like this from happening in the future, it's important to diversify your investments and spread your money across multiple financial institutions. Keeping track of your deposits and ensuring that they are backed by the FDIC is crucial to your economic safety. Additionally, it's wise to pay attention to the financial health of the bank you have your money in. Checking their financial reports and credit ratings can give you valuable insights into the institution's stability and help you make informed decisions about where to hold your cash. And remember, banks rely on consumer trust. Without that, they are nothing. Thanks for watching. Remember, here are some key takeaways from today's video. It's important to diversify your bank deposits and not keep your money in a singular institution. FDIC insurance protects depositors, but uninsured depositors are not entitled to full compensation. Company-specific failures can have ripple effects throughout the industries they serve. Remember to keep an eye out on your banks and stay informed about their integrity. Let us know in the comments below what you think will happen in the next few days after the SVB collapse. If you enjoyed this video or learned something new, don't forget to hit that subscribe button and turn on notifications for more in-depth content from You So Crazy. And we'll see you next time.